Alrighty, hey everyone. We should be currently live on LinkedIn and Twitter. We'll wait a few minutes for people to trickle in, and then kick things off at about 2 minutes past the hour. So we'll just hold tight until then. LinkedIn and see what we're looking like on there. LinkedIn and see what we're looking like on there. Nice. We've already got a lot of comments. People are very happy that you're on this panel, Jannat. Yeah, it seems like you have a lot of fans on LinkedIn, which is cool. And we will give it 1 more minute before kicking off. Nice. We've already got a lot of comments. People are very happy that you're on this panel, Jannat. Yeah, it seems like you have a lot of fans on LinkedIn. I definitely want to mute that. Cool. Okay, cool. All right, a few more seconds for people to trickle in. Looks like we have about 40 people on LinkedIn at the moment. The number is slowly going up there. Alrighty, so let's kick things off. Hi everyone, thanks so much for joining us. Whether you're joining us on LinkedIn or on Twitter. I'm Taimur. I'm one of the founders and CEO of Causal. Our product is a business planning platform hoping to simplify financial planning for startups and scale-ups. And this session is really about finance at the early stage. And I'm really excited for the conversation today because I'm joined by two very special guests. The first is Jannat, who is the head of finance at a company called Lean. She's a VC turned operator, so has kind of a good perspective from both sides of the table there on the finance side of things, as well as Jordan, who is the co-founder and CEO of Compound. Compound is a wealth management platform for tech employees. Before I give you guys a chance to introduce yourself in a bit more detail, maybe just to set a bit of context as to why we're doing this. At Causal, we've worked with lots and lots of early stage, growth stage companies who use our product. And with everything going on in the economy right now, over the last 6 months, we've seen a pretty big uptick in demand and usage, actually from the earliest stage teams as they start to prioritize finance more than they did in the last couple of years. I think in the good old days of 2020, 2021. If you're an early stage company, you could get away with not worrying too much about your burn and your runway. You could be pretty confident that the next round will be, a few months down the line if things go well. And runway and cash would, people just stop talking about this stuff. But given everything that's gone on in the markets, things are harder now. Valuations are down, round sizes have decreased. The bar for raising that next round has gone up it's the Series A, Series B onwards. And so runway and cash have really started to matter again. And so I think that's why we've seen a lot of earlier stage companies, start to go back into tracking expenses and doing more forecasting and planning than they used to do before. And so we've been doing a bunch of stuff at Causal over the last few months. We've just launched a new self-serve product experience designed specifically for these early stage companies to get started really quickly. And today we're really trying to figure out what is it that early stage companies need to worry about, and what are the things that they can ignore when it comes to finance at the early stage. And so that's what the conversation is going to be focused on. Before we dive in, would love to kind of hand things off to you guys just for a bit more of a detailed introduction. Jordan, maybe off to you first for a quick intro on yourself and Compound.
Yeah. Well, thanks for having me, and appreciate everyone for hopping on. My background is primarily in software engineering and writing. I helped start a company called Compound a few years ago, mainly because I actually didn't understand finance as a broad concept, and was on a mission to understand it both for myself and for others at a kind of more personal wealth management level. And fast forward several years, and we're a wealth manager. We help people with financial advice, help them invest money, file taxes, borrow money, kind of this like family office of different products and services. But the really interesting byproduct of what we've built is we've kind of built this magnet to attract all of these tech founders, employees, investors, all these people who work in the technology ecosystem. And what is increasingly interesting to me as it relates to this topic is just how people think about the kind of wealth accumulation journey and startup development journey kind of throughout the tech ecosystem, how that's evolved, over the past year or so. So very excited to be here. And I can promise you one thing, which is that I do not know the future for anything in any capacity, but I do believe in thoughtful planning and intentionality. And I think what Causal's team has been doing is a big part of that. And I think what we try to do as well at Compound is just help people kind of make sense of stuff that is unnecessarily opaque often. So that's why I'm here.
Awesome. Thanks. Jannat, over to you.
Yeah, maybe the slightly boring introduction compared to that, but my background, I started very much in kind of the traditional investment banking that leads you down the VC path. And in VC, I was investing in B2B softwares, fintech, bit of digital health and network effects. I did that for a number of years before saying, you know what, I would love to experience high growth from the inside. So was very fortunate prior to Lean to head up strategic finance at Hopin. So on that side, I saw the kind of up and up. We had the tailwinds of the pandemic kind of on our side commercially, and a very successful kind of series of fundraisings and metrics and growth there. And then now I'm at Lean Technologies. We are a Middle Eastern fintech. I'm head of finance here, CFO equivalent. And Lean is enabling open banking for the Middle East, which hasn't had a high degree of fintech penetration that we know and see in the West. So just very excited to do something 0 to 1 in an unserved region. And what brings me to this panel is thanks for having me. But of course, it's something that's quite consistent with everything I've done in my career. Metrics matter, deep analysis matters, but you realize when you think about seed, pre-series A, it's quite normal not to have a full-time finance person on your team. So if you're listening and you're a founder or an operator in an early stage company, pre-series A, don't worry if you don't have a finance person. There's a lot you can do in and around your financial infrastructure to enable you for success and growth. And that's what we're here to talk about today.
Absolutely. Awesome. Thanks so much for the intro, guys. So maybe we can kind of start at the beginning. I think a lot of the folks watching this might be thinking of starting their own companies or might be founders at that sort of pre-seed, seed, maybe Series A stage, and they're having to figure out for the first time, what do I do for accounting? What bank account should I set up? Which is a more complex question today than it was a few years ago, and things like that. So Jordan, I'd love to start with you. You started Compound 3-4 years ago now. When you're starting a company, finance is not top of mind at all. Finance is like, we need to do this thing to keep the lights on. We don't want to break any laws, but we want to spend as little time on this as we can just to kind of, focus on the business. How did you figure out, what that like minimum viable sort of finance setup was? Was it, through YC? Was it talking to other founders? And how did you approach just setting up the basics so you can move on and grow the business?
Yeah. I think the most interesting learning I've had and experience I've had building a company is that it's not a question of being incrementally correct. I think it's often a question of what you can do to maximize your effectiveness at any particular moment that kind of de-risks your business and helping you get to the next level. So I say that because there was a part of me very early on that wanted to try out every banking startup, that wanted to try out all the financial planning tools and wanted to, talk to everyone. And I am that type of person that was trying to optimize everything. But it turns out that what I really cared about was kind of being globally optimal across my business, not necessarily locally optimizing in one particular way. We ended up doing a program called Y Combinator. And actually, a lot of the recommendations for a lot of our early finance stack came from Y Combinator directly and just came from our batchmates and people around us. I think in hindsight, there was pros and cons to that approach. For example, I remember that for our law firm, maybe adjacent to finance, we ended up working with a startup law firm. In other words, like a venture-backed law firm, and they ended up actually going out of business. And it was actually somewhat painful to switch over afterwards, but I would say it was still not like excruciatingly painful. In other words, like it didn't really matter that our core piece of our stack had to change. So
Yeah.
early on, we ended up with a lot of Y Combinator's recommendations. So I'm happy to talk through what we actually had used, but yeah, that was kind of our plan early on, was just kind of go relatively fast.
Nice. Yeah, I think for us it was pretty similar. I think Mercury had just started like a year or two prior, and it seemed like, okay, yeah, these guys have a nicely designed website. They see, founders seem cool from like Twitter and stuff like this. Yeah, let's give it a go. We really didn't think too much about it. And I think we kind of got lucky that it's just kind of worked out, and Mercury have been pretty good through everything that's gone on in the last few weeks. But yeah, I remember we really didn't give it too much thought. What about on the sort of accounting side for you guys? Do you, did you kind of do that in-house or just hire someone on Upwork for a bit? Like, how did you
Yeah.
approach that?
So I think there's several different jobs to be done, and happy to we can chat about this in different capacities. But there's different jobs to be done in the finance world. So when you're talking about finance, that can mean multiple different
Yeah.
things depending on where your business is and where you want to go. One of those functions, as you mentioned, is accounting. But even accounting is kind of a broad word.
Yeah.
So to make it a little bit more tangible, we thought it was important, and I would say for most people it's important, to have a books and records closed every single month accurately, so you understand what's coming in and what's going out. It's fairly basic math overall, I would say, but we actually ended up working with an external accountant very early on, whose sole function at the time, they set up a QuickBooks profile, and they were responsible for closing our books every month. And this eventually evolved where we hired a larger team externally who's responsible for doing this. But for the first year, we just worked with that one external accountant. They were kind of a sole proprietor who worked with a lot of startup people, and that's how it worked.
Got it. And I'm guessing at this stage, there's no financial model, there's no like Excel, like you're just focusing on building the product, and you can do the math in your head of like, hey, we're burning this much on salaries and we have this much in the bank, right?
Right. I mean, before Causal came around, we were definitely building a Google Sheet that,
Okay.
so we had awareness of a lot of those key indicators. I like to think about businesses in terms of an equation. So for our business, our equation is attract, convert, retain, grow, right? So for each of those big buckets, there's different ways to view the health of them effectively. And for the first day we started the company until now, we've cared about that motion. At different points in the company, I can tell you, I didn't really care about attract, right? For the
Okay, yeah.
first year of the company, I didn't care at all about attract, actually. I thought that was motion. What I cared a lot about was actually retain and eventually grow. So I say that because that was kind of early on how we decided to kind of allocate time and resources.
Nice. Yeah, no, that's a really interesting way of looking at it. Jannat, you joined Hopin a couple of years into their journey, and I think the same for Lean. And so I'm sure, when you join this kind of existing company as like the first finance person or a very early finance hire, I'm sure there's a lot of messes to clear up that have sort of accumulated over the prior few years. Yeah, what are some of the good things, some of the bad things that you've seen as you joined these sort of like Series A-ish kind of stage companies that are growing quickly and haven't had that
Yeah.
full-time finance function yet?
Yeah, it's a super interesting question. Usually, firms can get very caught up in trying to mandate an accountant very quickly and finding somebody who might be local, boutique. And boutiques are fine, but if they don't understand technology businesses, they won't reconcile your accounts correctly. So, they won't understand what Causal is as a line item when it comes up. They won't understand it's a software tool. And what you really want is to have an accounting firm that has empathy for what it is to be a tech company. And we're very lucky in this day and age to have a lot of firms out there who really do get tech finance and tech accounting. So usually the first thing to do is clean up the chart of accounts to make it look more like a marketplace or a SaaS company or whatever it has to be. And by that I mean, literally make the P&L relevant to the business model. And gross margins are important and EBITDA is important, and make it look like what it's meant to look like rather than making it look like a generic
Okay. So
generic
you
business.
you
So
found that a lot of
yeah.
a lot of companies, have kind of ended up in a state where their accounting setup is not really tailored towards being a tech startup, and it's kind of just a very generic setup, and your first job is to basically clean that up and get the accounts right.
Yeah, it's usually changing the accounting firm has been a common theme, but also then just to have somebody or a firm that really, really understands what's going on, and also a firm that maybe uses better tech and gives you a tech stack and enables you to do things better. And then, yeah, on the other side, just cleaning stuff up to make it resemble a tech company.
Okay, nice. And how long does that take, just for context?
Well, it depends. When I came into Hopin, and at that point in time, I wasn't really mandated to look after accounting, but at the same time, who else was really there to do it? So, the company was eight months old, had been trading for 3 or 4 months at that point in time. So, kind of, it was more simple with a SaaS company, with that business model, whereas at Lean, particularly because of the jurisdictions being the Middle East and making sure you're compliant with GAAP accounting in those markets, but also, having entities in UAE, Saudi, Egypt, and being a little bit more broad based. So the number of entities you might have because of your business model, maybe you're selling in a variety of markets, that can add complexity. And if that's the case, you definitely need external help. There are obviously business models where you might only have an entity in the US or the UK or a single market, which can make it simpler. So
Yeah.
I'd say the number of entities adds complexity. The various requirements. If accountants have booked things in a currency that doesn't actually relate to your investors, maybe you want to do some dollarization of your business and things like that. So it really depends on what needs cleaning up. But I would say it can take about 3 months of a good scrub
Okay,
to
right.
clean these things up.
Nice. Yeah, I think the kind of complexity of having multiple entities is something we totally didn't appreciate when we started the company. My co-founder and I were based in the UK. We wanted to be kind of a remote first company from the get-go. This was a few months pre-COVID, and so we incorporated in the US. Most of our investors were in the US, and then we had to set up a UK entity to properly employ ourselves. Now we have like 6 people working for us in Canada, so we've set up a Canadian entity, and I think we just didn't really we didn't really worry about we didn't really worry or know about what that would actually mean if we have these entities. And actually now we have like 3 sets of accountants because we work in these 3 different countries, and the sort of the dollar cost of actually like staying compliant and paying taxes and everything in 3 countries, plus just the time of like one of our team has to manage all of these accountants. I think if we had known, I think probably the thing we might have changed is we might have just incorporated in the UK, and it might have made it a little bit harder to raise money from US investors, but I'm sure we could have sort of figured that out, and that would have probably, saved us a bit of a headache, I think, in that early period. Jordan, I'm guessing you guys are just like US company, you don't have other
Yeah.
stuff going on.
Yeah, we're a US based business, but I did want to emphasize, I think the point around finding a partner or software infrastructure that understands startups being especially important. I think if your overall objective, if you make it really clear, is so that you, the founder or leadership team, can understand the equation of the business intimately, accessibly, whenever you want to, and you kind of work backwards from that, then of course it's obvious that your infrastructure provider should be familiar with your
Right.
business. I think the biggest failure I see people make often is not when they don't understand the equation of the business, because then generally some red flags are already up in their head. It's actually when they think they understand the equation.
Right. Yeah.
They're actually looking at the wrong data, or they're looking at the wrong part of the equation, and such they start spending lots of money, pouring the ads on,
Yeah.
thinking they have a cheap product market fit, when in reality they're investing in the wrong places. So I double want to emphasize that finding a partner who speaks your language will not only save you lots of time and make life more enjoyable, perhaps you're not educating them on your reasons, but it makes a really big difference towards your understanding.
Nice. Yeah, on that note, I mean, Jonathan, how have you found the founding teams, CEOs of these companies once you've come in? Are they do they have do they have a sense of how much money they're burning every month and what their runway is? Like how much do they actually care about the finance side of things, costs, economics? Are you having to try and force them to care about this thing? Like, what's the culture like when you join these companies?
I think when you join, they already, because they hired you, they know that there's an acute need
Okay.
for this kind of depth. But what you realize is they really want a strategic partner. They don't think of finance is just an accounting or reporting function. They want you to be critical. They want you to be data driven. And I'd say the modern CFO or finance stack is really increasingly data driven. Like I've trained my team in SQL. I've trained my team in being essentially generalists with good data skills who can apply their skills to finance. So they really want a partner that can challenge them. And I think part of the role of a CFO or a head of finance that's really challenging and difficult is you have to be the naysayer, but you also have to be the sparring partner of the founder. You know, the founder might want to do a particular initiative and you need to ask those challenging questions about return on investment or ROI. Like, what does success look like if we deploy this money to launch this new market? What does success look like? And how will we measure it? And how do we keep ourselves accountable? So I'd say founders are probably pre-finance hires aware of what's in their bank balance, but not the quality of the cash movement. I think a lot of founders get taught to monitor their cash. If there's nothing else that they can monitor, just keep tabs on their cash, particularly right now. But there's a lot more to the story than just a cash flow statement, and that's where we come in.
Nice. And obviously, I think pretty much every company is trying to figure out ways to extend their runway, cut costs, and things like that. What have is that something that you guys have gone through, and what have you guys have found as some easy ways to reduce burn, maybe on the software side or other OpEx? Jordan, is that something you guys are doing right now?
Yeah. So I have a few takes here. The first is a few buckets. Well, one I think is a bit uncomfortable to talk about, which is that people, I think like startups are not necessarily designed to have mediocre journeys for the next 10 years. And what I mean by that is like the objective for me, like if you wanted to just extend your runway, you could like let go of your entire team, not spend any money,
you
and
could
cash for 10 years
or
20 years. And my emphasis to you is like, well, what are you actually trying to achieve as a business? And like, let's work backwards from that. So that way you're not like creating all this motion. You think you've been successful because you now have 12, 20 years of runway, but actually build any business to begin with. So I say that as a backdrop to saying, being aware of your runway matters a lot. But even more importantly to me, because when people ask me about runway, I'm like, well, it depends. Like, are we going to hire more people? Are we going to spend more? Are we going to get more customers? How confident are we in these different scenarios? Having like awareness of that, I really believe is step one. And I think to y'all's point around the finance function, right? These numbers, understanding the numbers. Well, finance people may seem like they're really complicated. They're complicated numbers, but in a lot of the way, I believe the value you get is actually using the numbers as a tool to be strategic. When I think about runway extension, I think about how can you be aware of certain numbers, whether that be variable spend or fixed spend, that you can eliminate that actually doesn't decrease or it doesn't increase the risk of the business failing.
Yes, exactly.
Trying to identify those opportunities is what we've invested in figuring out things. The biggest thing we've done to kind of stop the ramble here is actually just focus on the right type of customers. The biggest change we've made over the past year is that we've had really a broad set of customers, one category of people who are willing to pay us lots of money today that we could serve very profitably, and then another category of people where the payback period was actually much longer. And simply eliminating or kindly eliminating that category of people that were a lot more expensive to serve actually saved us a ton of money and time.
Interesting. Yeah.
That was big.
Yeah, I think we've kind of gone through a similar thing where I think we were fortunate that we raised at the top of the market at the end of 2021, and so I think the cash runway piece is less relevant for us. I think for us it's I think you have kind of a fixed window in which you have this team assembled, you're all motivated to do this thing, and like sure you could drag it out to 10 years, but like no one actually wants to do that. And so I think it's been like a good opportunity for us to sort of focus in on like, hey, what's actually working, and let's double down there rather than sort of trying lots of different things and that kind of stuff. I think in terms of just like general cost cutting, I feel like most of the tools that we had were pretty, we kind of needed these tools. You're not going to ditch your CRM. You're not going to ditch your sort of, various developer tools. Jonathan, I wonder if there's, are there any things that you guys have been doing at Lean to sort of extend runway and focus in a little bit more?
Yeah, similar to Jordan, one of the things that we really focused on was revenue quality, and I think he's already made that point. But moving up the value chain to enterprise customers who might engage in longer sales cycles, but can really give you that high quality, longer term commitment revenue, but also keeping two kind of sales motions going. So one that's slightly higher velocity, but brings things in faster, but also moving upstream. So maintaining those two motions has been really good for us. And then obviously that's more on the cash inflow side, and then on the cash outflow side, we just had to manage the hiring plan very carefully. So there are things that you can do with your current cash burn, of course, but you can also do things about your projected cash burn. When you aggregate everybody's asks for, I need 5 DevOps engineers, I need 10 salespeople. Okay, do you need them all at once? Shall we stagger them? What does success look like? What is the ROI on these hires? Like really, really understanding what everybody wants. And then to your point, there are a lot of things that tech companies have in terms of softwares that are just KTLO. You keep the lights on with these tools, so you can't switch things off, but maybe you can procure things from cheaper sources. Maybe you can renegotiate some of those contracts. So we're a little bit more proactive in making sure that if there's a startup discount available, that we track it down and make sure we have it. If a VC has a particular discount code that they can share with us, we make sure that they're sharing those with us. And you kind of have to be a little bit shameless to just ask for a discount when it's not given as well. I think a lot of people are a little bit shy about saying, oh, well, they've given us a quote. And no, you negotiate back, you push back. So, now's the market to do it. So I'd say we're also a little bit more prudent in our procurement processes as well.
Right. Yeah, I'm often surprised at how, literally just like a 10-minute call asking for a discount can actually just save you thousands of dollars. So it's pretty good ROI to do that. And yeah, we're starting to see, with some of our customers, I think probably on the sort of larger end of customers, so like Series C, D kind of companies, that I think have been hit really hard by what's going on. I've had to layoffs and stuff like that. We're getting requests for like, hey, can we like push out the billing to 2024 so that we don't have to, we like Causal, we want to renew, but we don't, it'd be great if we can just pay for it in January rather than pay for it in 2023. And so, there does seem to be a lot of that going on. I mean, one of the things that, yeah, I was on a customer call just before this actually, and he was saying that it's an interesting time for them on the finance team, because over the last few years the founders didn't really care about finance. This is like a kind of unicorn company, growing really fast, raised lots of money kind of thing. Founders didn't really care about finance, and actually over the last few months, the founders are like much more involved. They genuinely want to see like, hey, can you just like send me the P&L? Like, how do I just get access to all these numbers so I don't have to keep bugging you? Like why are we spending this much on X, Y, and Z? So it does seem like there's been a bit of a culture shift. I think, yeah, probably at the latest stage where the numbers are bigger, and where it's easier to lose track. I think probably, like seed Series A, it's hard to imagine like wasting loads of money on something that you just didn't realize, right? I'm curious to dig into, we've touched on accounting, and like obviously it's kind of a keep the lights on thing. You have to do, you have to have some accountants, you have to pay your taxes. Most founders don't have accounting backgrounds, but I feel like, everyone pretty much outsources their accounting, right? And you want to find someone who has worked with startups, ideally startups similar to your business model. What's helpful when actually working with these outsourced accountants? Because I think what we found, a lot of the people we talk to are unhappy with their outsourced accountants. They find that they have to double check the work a lot. They're actually spending a decent chunk of time on this thing that in their head we're like outsourcing, but actually you're still spending a few hours a month working with them. And so I'm curious Jordan, what does your relationship look like with your outsourced accountants at the moment? Like, how much time do you actually have to spend with them every month? And like, are they sending you like a PDF? Are they just like making sure QuickBooks is live and you can always check it? What does that look like?
Yeah, great question. So, as the business has scaled, we've built out a finance function at the company who now manages some of our external vendors. But early on, my objective was actually really to boil a lot of my interaction into this kind of end of month closing report. So every month I got a PDF. I try to, and we do this in product, we do this in finance, try to work backwards from an end state that would make us happy, to make sure we understood exactly like the level of rigor and detail that we wanted to get out of the analysis. And then candidly, what I did, I'm now, I'm a licensed financial advisor now. I learned a lot about finance, but I actually relied a lot on my investors and people outside of my company who I knew. We raised money from a lot of finance background people who were much better than me at analysis and rigor. So both when interviewing external parties, but also interviewing our now head of finance and others, I relied a lot on external people to vet and qualify a lot of these folks. So that was my approach to making sure we had kind of a solid function. But the last thing I'd say related to this is my obsession was really with just awareness of the equation of the business and always working backwards from that. No matter how more sophisticated, now we have like multiple entities with the business, we have subsidiaries, we have all these different pieces. All of that, my fear with all of that is I get too far away from the equation and I have lack of awareness of where problems spin up. And what turns out as the business scales is not that the equation goes away. In fact, it just becomes more abundantly clear to you where you need to apply pressure in the equation to solve problems. So that's my biggest fear with finance. Even when hiring people, is like, oh, we hire the smart person, I don't get to understand the equation. It becomes this algorithm that I don't get. I wanted to make sure I avoided that.
And so how, practically speaking, how do you do that? Is it just about sort of making sure you have a fairly simplified, P&L or like management report that the accountant's sending you? Like how are you actually doing that?
Now, well, it's evolved over time, but now we have a weekly metrics meeting where there's an email sent to the entire group before the meeting. We also share this monthly at the company level, but every week there's a group that meets. There's an email sent ahead of time. There's a package. The entire agenda for the meeting is going through the equation, which is attract, convert, retain, grow. And for each of those buckets, we're looking at the key indicators around each of them, and someone owns each of them as well. So they're talking to what activities they're doing to improve each of them. My biggest concern, again, maybe similar to before, is first of all, having the data, which takes actually time and being aware and categorizing things appropriately. But then my biggest concern is when I see a problem, I see something that I think is a problem and other people don't think it's a problem. So making sure we're aligned on like what standards are, and we can talk a bit about goals and how we think about that. But that alignment between the team as the team has scaled, that's been the most important thing to align with people on up front. Otherwise, someone could see a number and they could say, like, in our business, people would be like, oh, I came from a more traditional wealth manager. This seems roughly in line. My reaction is, well, we don't want to build the traditional. We want to be a lot better, right? And we want to do something a lot better. So this is how I kind of think about some of that analysis.
Nice, interesting. And Jannat, I think at Lean, you guys have in-house accounting at the moment, right?
We have one in-house accountant, but that doesn't really deter from the fact that we still want bookkeepers outside, because we just have a huge perimeter to take care of. But I totally agree with Jordan. Having like monthly or whatever cadence calls you have with your accountants is really important. But in our case, I'd say, particularly on the burn side, 80% of our burn is payroll. And if you can use a payroll software that automatically logs a journal entry into your accounting software, then do it. If you can use a accounts payable tool that has virtual cards or physical cards, where again it auto reconciles it and logs it into your ERP or your accounting system, then do it. So I love finding these softwares that make AP really, really easy, make payroll really, really easy, and then automate those things. So I'd say there are a lot of tools out there, not necessarily covering all markets, depending on where you're listening from, but key kind of Western markets are definitely covered. And now increasingly, I'm a big benefactor of some new tools coming in the Middle East as well. But yeah, these definitely help. I wouldn't say that they eliminate the need for bookkeeping services, accounting, tax. There are other things to consider. But they definitely go a long way in QAing or pre-checking that things are being logged in the right place, subject to obviously setting up the chart of accounts the way you want it in the first place. And usually when you get these tools, it's a really good forcing function to kind of sit down and say, how do I want my P&L to look? And to Jordan's point, most investors, I myself was an investor, we come from these backgrounds where we see so many that we have a view of what good looks like, and we'll try and influence and make sure it kind of converges to that. So definitely talk to other founders, find like kind of common ground in what kind of P&L would work, but investors definitely ask them, because chances are they have, if not an accounting background, at least enough of a finance background to have seen so many comparables that they can definitely help tell you what that should look like.
Yeah, we definitely had a lot of investors with financing backgrounds who, for us, it was quite nice because they were sort of early users of the product, providing us feedback on like more of the financial modeling side of things, but then also advising a little bit on things like accounting. I mean, for founders and people, chiefs of staff, biz ops people who have to be the point of contact with these outsourced accountants, I think one thing that I definitely found like a bit baffling is like, what's the deal with this whole closing the books thing, right? It seems like all the tools are talking to each other, right? Our HR system and payroll and stuff is all automatically feeding into QuickBooks. We use Ramp for like our spend. Again, automatic categorization, automatically feeding into QuickBooks. What is the deal with closing the books, and like why does it take weeks after the end of the month to actually know what the numbers were in the prior month? Yeah, Jannat, could you shed some light on like what are the bookkeepers doing behind the scenes? Because I think a lot. I mean, I was certainly in this position. I think a lot of founders who are working with these accountants are probably thinking like, I don't get it. Like the numbers are all there. Like why do I have to wait sometimes 3, 4, 5 weeks to know what happened? Like a month ago.
Yeah, and in some cases, your guess is as good as mine. But in other cases, there are nuances of things that you need to comply with. So you have sales, or your sales taxes logged in the correct way. You've paid sales taxes on things that you've procured. Are they logged in the correct way? Therefore, are you then paying onward the right thing or receiving back the right thing? So I would say, most of us, I would like to assume on this panel, are not tax experts. So I would say that level of compliance is really important, and letting it not build up past the month is usually key. So what I normally have as a pushback from accountants when I'm like, is it not closed? I swear I've given you everything. Like all the invoices are there. Like, what is it? And they're saying we're just double checking that, HMRC or whatever tax body it is, will have the right stuff, and that the invoices are also in the format that we need it. So part of it can be a bit of that. Part of it is one of the downfalls of outsourcing is that they're not exclusively working on your account, so so they have competing priorities, but usually making sure that everything's actually been done correctly from a tax compliance perspective, and just making sure they're also meeting their obligations as chartered accountants or CPAs is and they can sign off on stuff is usually key.
Interesting. Yeah, no, thanks. Thanks for that insight. I think, if you're not from an accounting background, it can definitely seem a bit opaque as to like what's actually going on, behind the scenes there. I'd love to move on to hiring related things. John, you said like 80% of your costs are payroll, right? I think that's probably true for most early stage companies. I think what we typically see is like as a seed stage company, you don't need a full-time finance person. I think Series B is where we mostly see people getting full-time finance people, and then some people doing that at Series A, depending on circumstances. Maybe the business is more complex, maybe there's like a lot of cash and it's worth having someone just making sure you're spending that correctly. Jordan, how did you guys decide to bring on this head of finance? Like what was breaking? What was like the job to be done of this head of finance that you now have?
Yeah. So I think even in zooming out in terms of hiring, like I think a lot of people end up hiring in terms of roles. I try to hire in terms of jobs to be done. I think the collection of jobs to be done result in a role. But if you just use broad terminology to describe, we're going to like hire, X person, we're going to hire a people person. It's like, well, what are they going to do?
Exactly.
So trying to really align with people on like what they're actually going to do, I think makes a really big difference in terms of efficiency for the business. It turns out that you may not need as many people, but also as related to the finance role, my feeling is that there are really at least two, but generally even more like distinct jobs to be done that are related, but truly distinct in the capacity of one being this kind of accounting function,
Yes.
accounting meaning maintaining the books, which may rely on an external party, but at the minimum being accountable
Right.
for that.
Yes. Yeah.
Also paying the bills. I'd even put in that bucket, making sure the bills are paid roughly on time for the most part. And then there's like a second function around strategic finance, let's call it, which may have to do with FP&A. It may have to do with financial planning and analysis. We also ban acronyms at Compound. It's a good way to learn all this stuff as someone naive.
Yeah.
So yeah, we this kind of strategic planning, and then there's actually a third bucket which I think is particularly important, which is actually this kind of reporting and communication across the org. And the finance hire we ended up making, actually, I believe, and we've had a few different people, but the person that our current head of finance actually treats finance a lot like a product, because what they've recognized is that no other wealth management firm uses data like we do to understand the state of our business. They just simply aren't using this level of granularity, such that if we are approaching understanding our business like a product in itself, for instance, I think our current internal dashboarding, we could literally sell to other advisory firms and help them understand which customers they should focus on and how to help. That approach has like drastically improved our business's health. And what was breaking, in my opinion, it actually goes back to the equation, was that the awareness of the equation was not transparent enough to the key stakeholders who needed to understand it, including myself, including the board, including our, let's call them account managers, including our marketing team. What we found is that if we were not empowering our teammates with ownership and understanding of how they were impacting the broader equation, we found that they ended up rowing in the wrong direction or not having sufficient clarity in order to make decisions appropriately. So that was like the number one priority for both for this person, and it's had a major ripple effect across the business in terms of where we invest and how we spend our time.
That's super interesting. And just to get a bit more sort of concrete, you talk about the thing that broke was that you felt like the stakeholders, you, the investors, marketing team, etc. You kind of lost awareness of the equation. What does that tangibly look like? Is it like, hey, you're in a board meeting and investors are asking like, hey, like, do you have a rough sense of your CAC? Like, how much it costs to acquire a customer? And you're like, oh shit, I have no idea. Like what are the things that practically made you realize that?
Yeah, I think for better and worse, my personal health is often correlated to the business's health. And what I mean by that is my personal mood, maybe not my health. It would be super healthy. But my personal mood tends to correlate to how the business is doing, for, again, very much better and worse. But what I found is that as we were scaling, as we were adding nodes to our infrastructure, adding more kind of sales touch points, more data that we were collecting as a business, I wasn't able to accessibly understand what was going on any given day. And it went from me being involved in every single sales pitch to us having a whole team of people being involved. And I wasn't understanding why people weren't converting or why they were converting, right? That level of detail and specificity, what I was really proud of, and I don't know if he's on this call, but our head of finance came in, and rather than delegating all this stuff and saying, oh, I need the data team to figure this out and I need the accountants to figure this out, he went into our data, went into the data tables himself. He luckily knew some SQL, but literally understood all the tables himself. He built all the reporting himself. So that way, when someone asks him, and one of the things that was happening before was, because we had outsourced it, when someone asked how this number got here, I didn't know the answer.
Yeah, exactly.
That wasn't sufficient. That wasn't fair to me or the team. So now we have someone who's accountable to the numbers. And as a result, we're able to move a lot more quickly, have higher quality discussions. People feel a lot better. But I'd say you want to get ahead of this stuff. I think is my feeling. Like, if you ever feel like you don't understand the equation, you can assume that your team doesn't understand.
Yeah, exactly.
That your external stakeholders don't understand it as well. And I would say I have been surprised that if you give, and maybe it's obvious to you all, but if you give smart, ambitious people clarity around what's going on, you'll be surprised by how much they can achieve. If you don't give them clarity, no matter how smart they are, no matter how hardworking they are, it turns out they may just row in the wrong direction or a different direction. So it's made a really big impact on how effective our business is.
Absolutely, that's super interesting. Jannat, is it kind of similar as what you found? What are the kind of the tipping points at which Hopin or Lean decide to bring someone like you in?
Yeah, I think it's quite often the board saying, maybe you should get someone.
Okay.
And they kind of know as well that they need that. But I think sometimes there's a stereotype that maybe a finance person is just an accountant, particularly if you're a first-time founder and you kind of don't know the nuances of what's involved in finance. So Jordan, to your point, I would love to meet your head of finance because I think we have a lot in common. I love SQL as well. And I think, Taimur, you and I have talked about this before. I don't even identify as a professional finance person. I almost feel like an imposter around that because I just like problem solving. I love playing with the data. I love going into Salesforce and seeing, okay, well, what's the health of the pipeline? And in my previous company, finance actually incubated the BI team, the RevOps team, the sales ops team, because when you don't have these functions, finance is kind of the natural catch-all place, or strategic finance, or however you delineate your finance team is kind of the catch-all place where this kind of stuff happens. So absolutely, I think obviously there's some classical things that the finance team need to do, but there are business problems that they can solve because you can collect data from everywhere and be kind of the hub and spoke of sales, pipeline data, payroll data, product analytics. Like, what is actually driving your monetization? Like, what are the leading and lagging indicators, and can you connect that to your top line? So there's so much you can do if you empower your finance team to do it in the right way. And obviously there comes a time where finance maybe can't own that entire portfolio, but they can certainly start that up.
Nice. Awesome. Yeah, I think that makes a ton of sense. And, we're not quite at the stage where we have a full-time finance person. I think as we get to that point, probably later on this year, I think one of the big things we'll be looking for is someone who's like, pretty, ideally semi-technical, who can understand the BI side of things and pretty deep in RevOps and, stuff like that. Because it's all kind of, to your point around the equation, Jordan, it all feeds into that equation of like, how is the business doing? And if you just understand the financial metrics, but you can't actually get pretty deep into the more operational side of things, I think it's a lot less useful. We'll jump over to the sort of the comments and questions in maybe 3 or 4 minutes. But final thing I'd love to get you guys' thoughts on is the kind of investor side of things. Obviously, going through fundraising is typically when you have to talk to a bunch of investors. They'll probably ask you for some numbers about your business, and then on an ongoing basis, monthly updates, quarterly updates, things like that. I mean, I think the environment now is probably very different to what it was in the last couple of years. I think certainly when we raised our seed and Series A, we were not really asked any questions about the finances. I mean, we were a pretty simple business back then. I think people were mostly looking at like growth numbers of like, hey, okay, you guys are growing like 20%, 30% month on month. That's pretty good. We have like roughly this much revenue. That's pretty good for Series A these days. Like, let's talk to some customers, understand some qualitative stuff. We were never really asked about like burn and things like that. I think like after the term sheet was signed, then it was like, oh, hey man, we got to do some diligence on our side. Can you just send us like your P&L or whatever? We just check the box, kind of a deal. I think my sense is that people do care more about that now, and I think like investors are kind of looking a bit more into the finances of companies rather than just like top line growth and revenue numbers. Jordan, how was your journey on the fundraising side? I imagine it was similar to us, where like no one really cares about the finances in 2020, 2021, right?
I think investors, like the way I look at it is like, I think about a business like this ball of risk, and there are all these things you can do to kind of de-risk the business's existence. You can like build product, get customers, get revenue, hire people, raise money. These are all kind of artifacts and tools you can use to de-risk the long-term opportunity. The secret truth in venture, though, is that venture is a power law business. So what you're looking for are outliers. You're looking for people that are going to outperform the average. It turns out that early stage data may not actually really be an indicator of what will turn into an outlier. And instead, some of these more qualitative measures, such as the team, the product, et cetera, they actually may be better at de-risking the longer term opportunity. For our business, my strong belief, and for what it's worth, we operate a business that I believe does not have high market risk. In other words, there's a market that already exists for the world. We're not inventing a new business, but has high execution risk. And as a result, for us to de-risk our business, what we needed to prove was not that we could get a bunch of people to our door, because I was very confident we could get a bunch of people to our door, and we proved that in micro ways. What was difficult for us early on was to prove that we could execute. that
Right.
you can convince someone like, trust someone like me to build this wealth management business. So that is where we focused on really retention and engagement with our customers. And
Yeah.
it was less about the client count. I
Yes.
think that was a good decision. I can tell you a lot of investors in different programs we did in different places were very much, how many new customers did you get? How
Yeah.
many new customers did you get? I didn't really respect is a strong word. I did not lean in those directions because I knew that
Yeah.
we could go get a bunch of people and they would all churn. And,
Right.
and it
Yeah.
turned
Yeah.
out that was not a good business either.
Yeah.
So for me, it was really important to tell the story around,
Right.
hey, we spent the first year, even more than a year for us, for multiple years, wholly focused on that customer experience. And sure, we need to scale to some extent, but don't really pay as much attention to that top line number. Let's
Yeah.
pay more attention to like our customers and how happy they are, because we
Mm.
can pour gasoline on that when we feel ready. And we're going to do that strategically in the coming months and years. So that was how we went about it.
Nice. Super interesting. How was it for you, Jonathan? I mean, I imagine you saw some pretty insane rounds at Hopin. Yeah. On the financial side, like, what did investors care about seeing? I think to Jordan's point, like there's a range there's quite a spectrum of approaches when it comes to investing. I think I am just being perfectly honest. I think in Europe, you find a lot of like folks at pre-seed and seed stage who like want to see some like 5-year projection or something, to angel invest in some companies. So there's definitely a lot of like folks like that out there, which generally we tend to be kind of the lower quality sort of investors who don't seem to get it as much. How was that? How was the fundraising experience at Hopin at Lean for you on the finance side, and what kind of numbers people are interested in looking at?
Yeah, absolutely. It's a great question, and I would say at the seed Series A stage, a good investor should be a little bit mindful of things other than just finances. The later stage you go, the more financial scrutiny there'll be, and people are going to measure up when they come in versus where you can potentially exit. And the closer you are to that exit stage, the more scrutiny it will come under. So if you're talking to a growth equity or crossover fund at that stage, you can expect most of the diligence to be financial. And we did see that with every progressive round at Hop, and the pressure was really on. The all-nighters were very much happening in my team, and we were answering questions with as much rigor as we could. I would say at the earlier stages, Jordan put it really well, where he said, look, VCs, the good VCs understand power law, and they're looking to kind of feed that. And it really starts with the idea of, are these the people that can execute a fantastic idea in a large, sizable, growing market? And what are the kind of risks and opportunities around that? And I think if you can't convince somebody that you are the people to execute in that market, then people won't even get to the stage of financial diligence. So the narrative needs to be super, super strong. And then you need to get to a point where you say, okay, yes, maybe you do need to present a financial model. I agree with you. 5-year financial models at seed and Series A stage are kind of crass, and nobody really believes that that's exactly what's going to happen anyway. The reality of all models is that they're wrong. It's a question of how wrong are they going to be. And if you're going to create a financial model, what you really want to base it on is your kind of leading indicators. And this is often said to be your traction. So VCs will say, show me traction. And it's not just like a raw kind of CSV export of your product data that they want to see. It's like, tell them the story and take them on the journey. So show what kind of viral loops you might have, show what kind of retention you're expecting to drive, show what kind of conversion can come from that, really tell that story. So I'd say, if you understand your leading indicators, then you can actually build a financial model that connects with your business. I think if you're building a model that doesn't connect with your story or a narrative or why you're the right people to execute this product or idea or solution in this large market, and you can't connect that all together, then the financial model is kind of worthless anyway.
Nice. Yeah, that makes a ton of sense. And I think, little causal plug, one of the things we're hoping to help solve is allowing your financial model to actually connect to your business by pulling in data from, your BI tool or your data warehouse, and, at places where the customer touch points actually are, rather than just like the revenue line in your accounting system that's feeding in. We have a few minutes remaining. I think there's been a bunch of questions in the LinkedIn live chat. So I will take a look through. Zachary asked, what are investors looking for from the finance function, given the current state of the economy? What would you say are the biggest changes from raising funds a couple of years ago? I think we've kind of touched on this a little bit. I think there's a general sense that at the later stages, efficiency matters a lot more. If you're just buying loads of customers with ads and things like that, that's less impressive than it was a few years ago.
Let me interject on that point. I think there was a word mentioned earlier that I really just don't really care about, but really think a lot about, which is quality of revenue. And I think that what you've seen over the past few years, but I think it's just going to continue to happen, is that people are going to wake up to this idea that just because you apply technology to something does not mean that your customers will all of a sudden have a ton of money to spend. If you build a product for people without a lot of money, it turns out that like it doesn't matter if it's a pretty product. It turns out that they don't just necessarily have more money to give them. So what's happened though over the past several years is they built that all these businesses built their business model around consumer and B2B around businesses without a lot of money. And now it's a question of, well, is it pure software, fully self-serve? Can you afford to profitably serve a long tail of people, which in Causal's case, for example, is pretty much yes, right? If you can self-serve onboard, it is great. Right. But if there's a huge cost and a huge support cost, right? The pure software businesses that sell to enterprise don't really exist so much in the world. You look at a business like Snowflake that has 60% gross margin. Snowflake is the software business, you think, right? So it's just I think what you'll see in the coming year is you'll see businesses really hone in on who they care about being their customer. A good example of this is if you look at Stripe versus Adyen. Stripe power the developer. They serve this long tail and they serve enterprise, so they're having to kind of attack multiple fronts. Adyen says we're going just for the enterprise. They have a small fraction of the employees Stripe has. Yeah. It'll be interesting to see. Not saying one approach is better, because in the long term, of course, it's better to serve all these people in theory. But yeah. I think people are going to be really religious about making sure they have a complete awareness of who their optimal customers are and really optimize for them.
Nice. Yeah, that's an awesome answer, and we'll definitely be taking a clip of that and sharing it around on social media. So that's a great hot take. Thanks, Jordan. We've got some other questions in here. Scott, who is advising CFO to a bunch of startups, talks about they're a great point on lag for closing the books. That's why Scott tries to provide a bottoms-up cash analysis ahead of time on a weekly, monthly basis. That gives founders and teams the ability to see what the finances will look like even if the books aren't closed. That's pretty interesting. We have someone asking, Dennis is asking, Causal, what are your short to midterm plans for product development and potential partnerships? I don't want to make this too much of a Causal pitch, but appreciate the question, Dennis. Short to midterm plans on the enterprise side, we're focusing a lot on collaboration. So for bigger companies, as teams are growing, more stakeholders, really being able to bring everyone into a single platform, which is Causal for this stuff. And on the self-serve product, it's really around kind of data integrations into the tools that people have. So we do very well with accounting systems and HR systems right now. Trying to go deeper on things like CRMs and other tools to be able to pull that stuff in. Other questions? I think that was kind of that was most of it. We have a bunch of comments around accounting. Maybe actually final one. Andrew Robinson is asking, I'd love to hear the rest of Jordan's jobs to be done by finance and accounting, as well as Jannat's input there. Maybe we can round off with that question.
Yeah, I think I mentioned a few of them. I think in general as a business, depending on the nature of your business, for example, like if you're a fintech business and you have a capital markets function where you have to raise debt, as an example, from third parties, that could be something your finance person does. But if you don't have that, then you don't have to worry about it. So I say that only because I think just rather than using like broad terminology, just breaking any job you have, if you're hiring a marketer, breaking that down to the jobs to be done, I think is a way to just be more efficient and really figure out who you actually want to hire. There's plenty of really, really smart accountants, for example, that you could hire that don't want to contribute. They're not interested on strategic finance. So if you hire them for your finance leader, they're not going to do that work and you're not going to be happy and they're not going to be happy. So I just encourage people to be explicit about things like that.
Nice. Jannat, anything to add from you around the finance jobs to be done?
Yeah, I tend to agree. Like the finance jobs to be done, there are very obvious things around accounts payable, payroll that everybody has to do, closing of the books. And then depending on, and obviously having a financial model, having the ability to have a pulse on your cash. But then there are other functions that might be necessary. If you've got taken external money, you probably need some investor relations, and then somebody to kind of deliver on that governance side of things and provide kind of whatever's been agreed in terms of information rights. You might need later on, you might want a finance person who can do corporate development. You might become inquisitive. You might need skills like that. So I'd say think about the bare bones skills that you need. I would say financial controls are essential. So that's all of the accounting needs, and to an extent you can manage that internally, but you can outsource a fair amount of that. And then within the sort of strategic finance suite or everything else, non-accounting, you'd have things that support the revenue analysis, you'd have things that support consolidation and financial modeling, things that support budgeting and headcount planning, all of these things that are required of a finance function to keep the business honest. Look, the finance team is not the police of the business, but you also need to be able to bring the story together and keep the rest of the business honest on what they said they were going to deliver. So, there might be a situation where the finance team even owns OKR planning,
Right. Yeah.
depending on how your organization is. So I would say there's no one master list to rule them all.
Yeah.
It's really about your org design in general. You might have a COO as well as a CFO.
Yeah.
You might have a COO instead. So the organization can vary. Your head of people might own payroll and headcount planning. So you can be creative about that structure too.
Yeah. Yeah, I think we at the early stage we definitely see finance as like being pretty close to things like operations, and I think head of finance and operations is a pretty typical title to kind of bundle some of these things in together. We're just over time, but Jannat, Jordan, thank you so much for joining me. This was super interesting. Really great to see you guys again, and appreciate you taking the time to chat. Where can people find you online if they want to follow you along? Jordan, what's the best place for you?
Yeah, I would recommend going to withcompound.com. We've got a bunch of free resources all about personal finance, taxes, estate planning, insurance, all the fun stuff. And if you want, we can give you a free consultation around helping you with your finances. So you can sign up on With Compound. We'll do that. And I think it will be useful for you.
Awesome. And Jannat?
Yeah, I just updated my name to my handle. So I'm at Jannat Shah on Twitter. And if you search that, I think my name is rare enough, thankfully, for that to be my name on LinkedIn as well. So those are the places to find me. Thanks for having me.
Yeah, no, great to have you guys. Thank you so much. And thanks everyone for watching. All the best. Bye.